the U.S. market has buyers from all over the world that are focused on holding assets here in US dollars because they want to own dollars, right? This is really important for people to understand is you could plug in Bitcoin in any type of portfolio and see where it pushes your portfolio out on that risk reward curve and enhances virtually any type of portfolio you've owned since Bitcoin was created.
Hedge fund manager James Levish highlights why Bitcoin serves as a superior global reserve currency compared to other options. He emphasizes that Bitcoin's unique properties and characteristics make it an ideal choice for such a role on a global scale. He believes that Bitcoin, with its decentralization, portability, immutability, and finite supply, ticks all the boxes that the US dollar and other potential contenders cannot. Growing interest in BRICS is evident, as an increasing number of countries are now expressing their curiosity and involvement. The primary objective is to challenge the dominance of the US dollar, a task that proponents firmly believe can be accomplished by utilizing Bitcoin's capabilities. According to Levish, whether it takes 10 years or 50, geopolitical moves like the BRICS gold-backed currency plan could catalyze a paradigm shift towards Bitcoin, which may eventually usurp the US dollar as the global reserve asset. According to data from MarketCap, the price of the leading cryptocurrency Bitcoin continues to grow as the BRICS gains more attention from several nations. Levish opines that despite these developments, the US dollar will likely retain its dominance in the foreseeable future. He points out that these circumstances underscore the long-term issues of US Treasuries, which will inevitably lead to more USD inflation. Levish mentioned that in the past year, Russia's invasion of Ukraine led to action being taken, including cutting off their access to the SWIFT system and seizing their assets and treasuries. This event sparked discussions among BRICS countries about distancing themselves from the US. We would like to share some highlights from the discussion with you. Before we continue, please remember to subscribe to the channel and click the bell icon to receive more updates.
Our system has an issue with the way the money works, the central bank system and the printing money, and we have no basis for our fiat currency. This is something that Greg and I talk about all the time. There's nothing of value except the backing of it and the belief in it. And for us to actually go and switch over to back to a standard where you have your currency actually attached to something like the BRICS have been talking about. It's a major undertaking, and quite honestly, there's not a lot of incentive for the system to change. And so you have both the red tape and little incentive for them to do this. So as much as I love to hear it, and I love to see it happen where we do switch over to a Bitcoin specifically backed currency, it's a pretty long road. And for a 4-year term for somebody, that's a long putt. Now, that said, I do appreciate the fact that he's putting himself out there. This will not be a popular narrative in the circles he runs in. So it's interesting to say the least. We saw over last year when Russia invaded Ukraine and we turned off their ability to use the SWIFT system. We seized their assets, we seized their treasuries. I mean, that's why you're hearing BRICS, the BRICS countries, that coalition talk about moving away from the U.S. Treasury as global reserve asset, because they need to have something they can have control of. And that's where they're talking about creating a currency that is backed by gold. Are they ultimately successful? No, but Greg is 100% right. The narrative is out there. There was a massive misstep by us to weaponize the US dollar and the treasury against a country. And so as much as we need everyone to use treasuries and to use dollars, it was a major problem. It was a major misstep. And so that's the narrative. Hold something that actually has value, hard assets. And there's nothing harder than Bitcoin.
According to James Levish, big banks have faced notable problems, particularly concerning gold, in recent times. However, in the short term, it's clear that institutions are showing a growing acceptance of Bitcoin. Fundstrat predicts that the price of Bitcoin might surge to $180,000 prior to the scheduled April 2024 halving event. The firm's analysis suggests that the introduction of a Bitcoin ETF by BlackRock could significantly increase the daily demand for the cryptocurrency, contributing to this potential price boost. BlackRock's interest is just part of this new shift, and the approval of its application can change the Bitcoin game forever. As per Levish analysis, once major institutions like BlackRock introduce Bitcoin as an ETF, it will extend beyond their internal funds involvement. They will make it accessible to the wider market.
We've seen issues in the big banks of this for gold, for instance. It's been a problem. But short term, look, the institutions are coming. It's just reality. It's what it is. They're coming for Bitcoin. They're getting more comfort around it. They're getting more understanding around it. And the big thing is that you have massive amount of consumer interest around Bitcoin in particular, and that along with the sightline of getting some sort of regulatory clarity around it is giving these big companies comfort that they can get into it. It lowers their personal risk. It lowers their reputational risk, and they can get on board and start offering this. When BlackRock has an ETF, it's not going to be BlackRock buying it. It's not going to just be BlackRock and their funds buying it. They're going to be offering it as an ETF to the street, which means that the important part about this, and this is the part that everybody kind of focuses on, and it is important, is that it's an easy on-ramp for investors who have not been able to get into the space yet to be able to buy Bitcoin without worrying about all of the issues that come with buying Bitcoin if you're in a small institution. What's a small institution? Well, that's like a small family office or a mid-sized family office that doesn't have the capability or they don't have the comfort around custodying their own Bitcoin, their asset. And so as fiduciaries managing this family office of money, they can't just go out and buy Bitcoin and then let it sit at Coinbase and feel comfortable around it. They can't go and buy it and then self-custody it, put it in a wallet and feel comfort around that themselves. It feels too risky to them. They don't understand it well enough to do that. And there's a lot of hurdles to get over that. When you're an institution, and I've talked through this before, you have to go through a chain of approvals in order to buy Bitcoin as a separate asset class. The only wrong allocation of Bitcoin is zero. I can't tell you how much you should have because everybody's different. Every single person's portfolio, personal situation, income, needs for cash is different. It's a volatile asset, but you should have more than 0%. That's it, period.
The BRICS nations' increasing interest in Bitcoin seeks to challenge the US dollar's dominance, with proponents confident in Bitcoin's potential to achieve this objective. While geopolitical moves like the BRICS gold-backed currency plan might gradually favor Bitcoin, James Levish recognizes that the US dollar will likely remain dominant in the foreseeable future, despite long-term issues with US treasuries and possible inflation. The growing acceptance of Bitcoin by major institutions like BlackRock and the potential approval of its ETF application could significantly impact the cryptocurrency's trajectory, making it more accessible to a wider market. Do you believe the US dollar will maintain its dominance, or could Bitcoin challenge it in the future? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.